You can't legally rob a bank.
Sure I can. The IRS just needs to get their cut. Welcome back. So today we're going to talk about how to legally steal from a bank. Sort of. Okay, fine. I clickbaited you just a little bit on the title, but at least I'm willing to admit it. During the first 3 months of the pandemic, banks charged over $11.6 billion in fees to Americans. Today, we're going to learn how to take just a little bit of that back. Now, what we're really discussing today is how to farm and churn bank account bonuses. And I myself make thousands of dollars per year off of these. And here's an example of one I made for $500 from Regions Bank just 2 weeks from the time of posting this video. However, it's important to watch this entire video so you understand the speed pass around a lot of these requirements. Because if you miss a detail, the banks aren't going to feel sorry for you and just pay you anyway. And knowing these general workarounds will allow you to capitalize on 90% of offers and show that it only takes about 20 minutes of your time. So you have to understand why banks even do these offers. And it's not out of the kindness of their heart. Banks exist to make money. The whole point is they're trying to hook a new customer, and their marketing department has determined that they're going to make more money back per the average person than that bonus is going to cost them. But we're not going to be the average person. Now they can make money out of you several ways, such as loans, credit cards, and pushing the like button for the YouTube algorithm. And if you're in the market and they offer a competitive rate, well, it can be a win-win scenario for both parties. However, they're also banking on you choosing them out of convenience, and there's usually better rates and rewards elsewhere, so it's good to shop around. But the real meat and potatoes, ridiculous maintenance account fees. I am shocked that people choose to pay monthly maintenance fees just for the right to have a checking account so they can take your money, invest it at a higher rate of return, and then give you a penny every other month. So you might see decent offers like $300 for opening a new checking account, but on the fine print, it's chocked full of fees. Oh sweet, $300 for a new checking account? I guess I can just go ahead and apply here. I guess we'll just go ahead and scroll to the very bottom and, oh, what the f?
You can't say on the air.
Don't worry, nobody's listening anyway.
So if you don't use this account the way they want you to, they're going to attempt to nickel and dime it all the way back. I mean, come on, it's only $10, peasant. But there's a silver lining where we can usually avoid these, and that's
Direct deposit.
many banks will waive this fee if you set up direct deposit, and we only need the account open long enough just to generate the bonus. Now, the average customer is just going to have one income from their job and one bank account. So they quite accurately assume that if you're willing to change your direct deposit with your employer, you're probably just going to stick with them with everything else that you do, because that's where your money is now. And unless you want Becky and HR to start keying your car, you're not going to be changing that direct deposit form every month. You see, everything is automated and digital, and there's a massive amount of transfers going back and forth on a daily basis. And from a bank's perspective, they usually can't tell the difference between a direct deposit sent from an employer and one that you just sent from a different bank. The Doctor of Credit is a great resource for this, and they have a page on user-generated data points on which transfers worked as direct deposits, which in most cases was just checking accounts. But in my experience, the most reliable option is going to be a brokerage account. See, for many retired people, their main source of income comes from their retirement accounts and their brokerage, and they're looking to park high amounts of cash because they can't take the same market risk. Banks want to get these customers. Now, I personally use Fidelity, but there's plenty of data points on TD Ameritrade, Charles Schwab, even Robinhood working for transfers. Whatever you choose to use, what this really comes down to is initiating a push versus a pull transfer. Essentially, a push is just initiating the transfer from the account that you're sending money out of, just like an employer does. And then a pull is just initiating the transfer from the account that you want the money to go into, which we never want to do. To explain how this works, let's take a look at Fidelity, who has an easy option to set up transfers to other accounts. Now we need our account we're going to send it to. We'll just make one up for the example. I'll name it after my neighbor's kid. Let's call it Chase's Bank. We'll give him a little logo here and a slogan, and we're good to go. Now we set up the transfer to Chase's Bank, but since we push it from Fidelity and don't pull it from Chase's Bank, it counts as a direct deposit, and there's no bank fee for you. So just remember, when filling direct deposit requirements, now for the next requirement you might run into, debit transactions. Look, I think you should be using a credit card for a ton of reasons, but if you're someone that likes using a debit card, then this really won't be an issue for you, so you can go ahead and skip ahead. But if you're like me and you want cash back on every purchase possible, we've got some workarounds for this. Now, the first and most varying way around this are monthly utility bills. Things like electrical, water, trash, sewer, gas, internet, cable. Well, probably not cable. Now, you don't want to go this route if they have card transaction fees, but usually at least one of these vendors won't. Then you can just pay online for the lowest possible amount, which in my experience can be a penny. But another option you can use are Amazon gift cards. You see, Amazon lets you buy digital gift cards for as low as 50 cents. So if you've got to fill 10 debit transactions, it's only going to cost you $5 in gift cards for something you're probably going to go ahead and use anyway. And if for some reason that's not feasible, we have one more option for you, and that's due to our friends at Venmo, Cash App, and Zelle. As many of you know, these accounts work by just linking a debit card. So all you have to do is just send yourself $1 from one account to the other the required amount of times, and you're done. It counts as a debit. Now, if the biggest barriers to entry are removed, let's talk about the red flag, holding a minimum balance. Can these be worthy offers? Yeah, sometimes, but they're often just not worth your time because 1, they require that minimum amount of cash, and 2, the return just isn't as good. Let's look at an example. Right now, Citibank is offering $300 if you deposit $15,000 and maintain that as your minimum balance for 60 days. And if you were to look at this on an annualized basis, it's about 12% return. Now, that's not bad if you think of it like a short-term CD, but it requires you to lock in $15,000 for that full 2 months. We can do a lot better than that. Now, let's take a look at this offer from Modify. They're offering $250 if you set up 2 direct deposits of at least $1,000, but there is no required balance. So all you have to do is week 1, do a push transfer of $1,000 and bring it back. Week 2, take that same 1,000, push it again, and bring it back. You're done. You have to remember, everything is automated, so you just generated the direct deposit that triggered the bonus. And now you were able to generate that bonus of $250 in just 14 days. That's a 25% return in 2 weeks. If you were to compare it to an annualized return, you're looking at 651%. And your money is freed up to go find the next one. Can a maintain minimum balance be worth it? Sure. But in this game, with so many offers out there, time is often money. Now the most boring, but the most important tip, and that is to press the like button for the YouTube algorithm. So the last thing to mention is that it can take a little while to get paid out. It varies offer to offer, but usually it's somewhere around 60 days from the time you've triggered the bonus before you actually get paid out in your account. Another reason why minimum balances aren't as good, don't go asking the bank on day 15, where's your money? Because you're really just drawing too much attention to yourself. However, you still have the money freed up, so just move on to the next offer. So you're pretty much just farming and continually getting paid out over time. And most banks have rules about getting more than one bonus in a set time frame, which is usually somewhere around 24 months. So often, once you get your bonus, it's worth closing the account, showing back up 2 years later, and doing it all over again. And if you're married, just use 2-player mode and double up on every offer. So that's our video for today. If you learned one new thing, please like and subscribe. It makes a big difference at seeing any of our future videos. And if you have any questions on any individual accounts, any bank account bonuses, or just different tips and tricks that maybe we didn't mention today, please put it in the comments below. Thanks for watching, and we'll see you next time.